So how much money do you need to trade the Forex market? This is one of the biggest questions that I get asked. So let's dive into it. There's no surprise that the brokers, the marketeers out there, they're always trying to lure you in, saying you can start with just $100. Then you see all those YouTubers out there flaunting their fast cars, claiming they started with next to nothing. So is that realistic? I guess it all boils down to your objectives. Are you aiming, for example, to quit your day job and trade full time? Or maybe you're looking to supplement your income using trading as a side hustle. Perhaps you're retired and seeking better returns than your current investments. If you want to trade full time, I think you need substantial capital. Trading isn't a guaranteed income, especially when you're starting out. To replace your salary, you need enough capital to handle the market's ups and downs without the pressure of having to have immediate returns. Imagine you earn, say, for example, $50,000 a year. To make that in trading, you're going to need a considerable account, possibly in the region of, say, $100,000. If you have a $100,000 account and you look for a monthly return of, say, 5%, that would give you about $5,000 a month. Let's say you're looking to supplement your income. Now, if trading is a side hustle, you can start with maybe $1,000 or $5,000. That could possibly work. But remember, it's all about percentages. Your goal should be consistent returns, not hitting those home runs, knocking the ball out of the park. And then there's the retirement trading income. For those retired, trading can be a great way to boost the retirement funds. The key here is preserving your capital. Of course, time is of the essence. You might be looking to beat the returns that you get from the traditional investments, but you also need to manage risk carefully. $10,000 or $50,000 account, in that case, could be suitable, depending on, of course, on your risk tolerance and your financial goals. So what is the fallacy of small trading accounts? Starting with a tiny account is like trying to build a skyscraper out of a bunch of building blocks. Sure, brokers entice you in with low entry points, but that often leads to quick losses. Small accounts usually mean you take higher risk and more pressure to overtrade, leading to burnout and mistakes. Brokers offering accounts of, say, $100 or $200 or $500 doesn't mean you should jump in with that small amount. Many traders start small accounts and they quickly blow through a $200 or $500 account. It's great business for the brokers, but not for you. You've often heard that expression in the past, I'm sure, death by 1,000 cuts. Well, $200 might not seem like a lot to lose, but if you keep losing it time and time again, it soon mounts up. Small accounts often lead to overtrading. You're trying to stretch your dollars, taking on big risks to grow the account more quickly, to make it worth your while. But this approach usually ends up backfiring. You end up making those costly mistakes and burning out. Now, let's talk about something that I think is a crucial part of a successful trader's mindset, and that's compound interest. Albert Einstein once called compound interest the eighth wonder of the world. Those that understand it, they earn it. Those that don't, they pay it. And if you've ever had a credit card and not paid back on a monthly basis, you know how compound interest affects you. Compound interest is the magic behind growing your account. Focus on small, consistent percentage gains. Compounding those gains over time can turn even a modest account into something quite significant. Imagine you start with, say, $1,000 and aim for 5% on monthly return. After a year, you're not just earning 5% on the initial $1,000, but on the entire account balance, which has grown due to your monthly returns increasing. That's the compounding effect, and it's very, very powerful. Now, it might not sound like very much, but over time, it mounts up. After 2 years, you'll have $3,220 in the account. That's the power of compounding, and imagine that on a higher account, say $5,000 or $10,000. It's a great way to build the account. Another thing, effective risk management. Never risk more than 1% per trade. In fact, if you've been following me over the years or so, you'll often hear me say never risk more than 0.5% or even 0.25% on a trade. Small, consistent gains over time using compound interest is the way to go. Aiming for 5% monthly might not sound like much, but compounded every year, it's around 80% return on investment. Now, I know few businesses that can boast such returns. Risking, say, just that 1% also protects your account from significant losses. This approach might seem slow, but it's about playing the long game. Consistency and preservation of capital is key. If you have $1,000 in the account, risking 1% means risking $10 per trade. If you lose the trade, your account drops to $990. But if you win and say you gain 2%, your account grows to $1,020. These small, steady gains add up over time. I'm hoping you're getting the message. We don't want to just be hitting the ball out of the park. I call them the smash and grab traders. The other thing we need to talk about, of course, is leverage. Leverage is a double-edged sword. It can amplify your gains. It can just as well easily magnify your losses as well. Many traders, I think, that use excessive leverage experience a roller coaster of account balances, soaring one week and then crashing the next week. Sustainable trading means using leverage wisely and focusing on the long-term growth. This is massive, important advice I'm giving here. Using excessive leverage might sound exciting. You might hear those stories of traders turning $2,000 into $23,000 in a matter of weeks, but they often crash back down just as quickly. Consistency is key. Excessive leverage is a fast track to the poorhouse and losing everything. Imagine, for example, you're using 100 to 1 leverage on a $1,000 account. A 1% move means you lose the entire account. It's a quick way to wipe out your capital. Get the message. Instead, use leverage cautiously, ensuring that it aligns with your risk management strategy. And achieving consistent 4 to 5% monthly returns is a big deal. If you do this, opportunities will certainly open up for you. Family, friends, investment firms, prop firms will want you to trade their money. Start small, build a track record, develop your skills and emotional discipline. The money will follow. Imagine you're consistently earning 5% per month on that $1,000 account. After a year, you've turned it into $1,795, as we've just discussed. This track record proves you can manage risk and grow capital. Consistently earning 4 to 5% monthly returns is impressive. It demonstrates that you have the ability to manage risk and grow capital, making you a very attractive potential for investors. Building a solid track record is also essential. It's proof that you can trade effectively and handle those market fluctuations. To prove your skills, keep a detailed record of your trades, maybe using a trade journal. We have one that we give to all our members. Analyze your performance and learn from your mistakes and refine your strategy as and when, but avoiding that cycle of doom, because we all have losses, as we know. This disciplined approach builds confidence and it attracts investors. Still on the fence and only willing to risk $100 to start trading and see significant returns for your efforts? Well, it's not doom and gloom. If you have the skills and you can manage risk and make consistent returns, maybe you should consider applying for our funded trader program. With just $110, you can trade a $10,000 account and get to keep 80% of the profits. If you click the description below, you'll also be taken to an area where you can get a 30% discount off your first $10,000 account, bringing your initial capital to less than $100. In fact, I think it worked out to be about $77. So start small, think big. Starting with $100, manage your expectations. You won't be quitting your day job anytime soon. Instead, focus on learning and improving your knowledge and trading skills. Over time, as you build a track record, consistent gains, bigger opportunities, I guarantee you, will come. Remember, trading, a bit cliche, but it's not a get-rich-quick scheme. It's about building a sustainable, profitable strategy over time. Another cliche, trading is a marathon. It's not a sprint. Build your foundation, prove your skills, and the money will follow. So, final thoughts. When you see those flashy ads or videos promising quick riches with small accounts, take a step back. Focus on building a strong foundation, learning the ropes and developing a strategy that works for you. The Forex market really does open up massive opportunities, but it requires patience and discipline and the long-term perspective. So if you're starting with $100, $1,000 or $10,000, remember these key points. Manage your risk, focus on consistent percentage gains, and let the compound interest work its magic. Over time, you will see your account grow and more opportunities will come. And if you do not want to risk your own life savings, apply to get funded through our prop trading program instead. It's the smartest and most efficient and highest possibility of a return for your capital. If you want to know more if you should trade with your own money or prop firm money, watch the next video and I'll leave a link here on the screen. Happy trading, and remember, the key to success in the Forex market is patience, discipline, and continuous learning. Keep at it, and I'll see you very soon.